This video reviews Canon's financial results for the first half of fiscal year 2025, covering the period from January to June 2025. Canon is a Japanese multinational corporation specializing in imaging and optical products, including cameras, printers, scanners, medical equipment, and semiconductor manufacturing equipment. 2025 First Half Review. In the second quarter, the overall market environment remained stable, despite the introduction of provisional tariff rates in the United States. Canon's performance was driven by the success of new products, leading to continued growth in camera sales. Network cameras, in particular, saw nearly 20% sales growth due to strong demand. In the medical segment, sales expanded not only in emerging markets, but also in Europe and the US, supporting the company's growth strategy. Although total sales for the quarter were slightly lower than the same period last year due to the exceptionally weak yen at that time, sales increased by 2% when measured in local currencies, marking a record high for first-half sales. Operating profit was roughly unchanged from the previous year because of exchange rate effects. However, in local currency terms, operating profit rose by nearly 20%, supported by higher sales and the benefits of structural reforms implemented the previous year. As a result, the operating profit margin improved by 0.2 percentage points to 10.3%, reaching a double-digit level. Overall, for the first half of the year, Canon maintained its profitability momentum with a nearly 20% increase in operating profit on a local currency basis. 2025 First Half Profit and the Loss. In the second quarter, sales declined by 2.4% to 1,140.2 billion yen, although the gross profit margin fell by 0.3 points. The ratio of operating expenses to net sales improved by 0.5 points, largely due to sales structure reforms carried out last year. As a result, operating profit remained nearly unchanged, but net income dropped by 6.9% to 83.7 billion yen, partly due to the revaluation of foreign currency receivables. Looking at the first half of the year as a whole, both sales and profit increased. Sales reached a record high of 2,198.6 billion yen, reflecting 2% growth. Operating profit rose, and net income also grew, increasing by 4.1% to 155.9 billion yen. The progress rate against the annual net income forecast of 330 billion yen is only 47.20%. Since the forecast has been revised downward, Canon is now expected to achieve the new 330 billion yen target, despite the progress rate being below 50%. Operating profit analysis. Sales volume and product mix contributed positively by 14.5 billion yen, primarily driven by increased sales in the imaging segment. Although pricing was negatively affected due to higher investment in sales promotions, this was more than offset in cost reductions. Operating expenses fell, even though personnel costs rose due to higher base pay and increased sales activity. This decrease in expenses was largely the result of reviewing and restructuring the expense framework of sales companies. As a result, operating profit on a local currency basis rose by 20.8 billion yen, or 17.6%, compared to the same period last year, reaching 139.2 billion yen. However, due to the yen appreciating against the US dollar compared to the previous year, there was a negative exchange rate impact, causing operating profit to decline slightly to 117.8 billion yen. Financial results by business unit. In the printing segment, sales fell due to deal timing, though some high-end printers and business products saw stronger sales. Office printing sales were stable with higher service revenue. Laser printer sales dipped year over year, but rose for the half period. Overall printing sales declined, but profitability rose from structural reforms. In the medical segment, sales grew in emerging markets and the US, driven by strong demand for MRI and CT systems. In the imaging segment, camera sales grew, driven by strong demand for new models, appealing to both video and still image users. Network cameras also performed well, resulting in profit increase. In the industrial segment, semiconductor and flat panel display lithography equipment were steady sales. As a result, overall sales in this segment were roughly flat compared to the same period last year. 2025 outlook. In the markets where Canon operates, the effects of additional U.S. tariffs are not limited to the United States. Combined with rising geopolitical tensions, these factors are leading to delays in investment in Europe and other regions. As a result, Canon lowered the forecast by 50 billion yen to reflect this impact. Although the anticipated decline in gross profit from lower sales is expected to be partially offset by reductions in certain expenses, the projections for operating profit and net income were lowered. Regarding the U.S. tariffs, it was recently reported that the tariff rate on Japanese imports to be 15%, but the company's current projection continues to assume a 10% additional tariff through the end of the year, consistent with the previous outlook. Based on this assumption, Canon estimates that tariffs will increase costs by 41.3 billion yen. To address this, it plans to implement selling price increases. However, due to these price hikes, a decrease in sales volume is expected, and this has been factored into each business. In terms of shareholder returns, Canon plans to raise the annual dividend to 160 yen per share, returning it to the pre-COVID level, which represents an increase of 5 yen compared to the previous year. Additionally, it completed 200 billion yen in share buybacks during the first half of the year. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 4,040 yen as of July 25th, and the US dollar stock price is $27.34 as of July 25th. After a medium-term downward trend, the stock temporarily surged following the announcement of a tariff agreement under Trump. However, it declined again on July 25th, after the earnings release included a downward revision. Current PBR is 1.13, and PER is 11.0. Dividend yield is 3.96%. Compared to the past few years, the PBR, PER, and dividend yield suggest that the current stock price is relatively low. Conclusion. Canon's fiscal year 2025 first half results were good in local currency, with operating profit growth driven by solid demand in the imaging and medical segments. However, the stronger yen and U.S. tariffs weighed on reported earnings and led to a downward revision of the full-year outlook. Despite these challenges, Canon raised its dividend and completed major share buybacks, showing confidence in its long-term outlook.